Today was a good day, but at the same time, I lost. But today was a good day because of I learned too. Today was Friday, so I don't trade. I shouldn't even be trading Fridays on the sale markets because the sale markets is, of course, we made like a beautiful turtle soup. We have this right here. We take 50%. Then we swept these lows right down here. For people who were going long, 10 a.m. we had news. We opened. We traded lower, Judas. Then we traded higher. 10 a.m. always makes a Judas. Always for the sale markets because of news. Right there was the third soup. So I shorted right here and then I got stopped out because of this bullish move. Why I was short? Because we had this SMT right here with the Brent, the UK oil. Let me fix that real quick. With UK oil. Save as UK oil. Yes, okay. And then I entered on this order block right down here, right here, about here. So basically what I saw was one PDRA disrespected, two PDRA being disrespected, and three PDRA being disrespected. It was my fault to actually not take into accountable about this PDRA being disrespected. But this, to me, looked like a good setup. We had this PDRA being disrespected. We had a second PDRA being disrespected. We had this order block right here being disrespected. Then from here to down here, premium was around this order block. I entered right here, then I got stopped out. That is fine, as long as I've learned my lesson. And what is the lesson? Never trade on Fridays. It's that simple. I never trade on Fridays. Never trade on Mondays. It's that simple. No one said. So back to what I was saying. On Thursday was an absolutely monster, beautiful trade. What happened? We had an SMT crude oil with the UK oil. We had an hourly order block. Right there. We're going back to the 5 minutes. What happened? The high, the middle low. We have the high, the middle low, and we need to make sure this high has a fair value gap. This high has a fair value gap. Why am I not taking this one even though it made a volume imbalance? Because this made a fair value gap. And this is also a Judas swing that was made after 10 a.m. open. So from this high to this low. Now, what is the model? Higher time frame PDRE hits, SMT. How many PDREs have been disrespected? We have 1, we have 2, and we have 3, and that is it. The moment I see this PDRE disrespected, I am looking at from the left side of the curve to the right side of the curve. From the left side of the curve, I see this imbalance inside discount. Price disrespects that, so 2 PDREs in discounts is order pairing. The moment we see this PDRA being disrespected is our bullish confirmation that we need to go higher. Now, when I was trading this, I was just on my, I didn't have anything on my chart. I was just trading it. All right. The moment we have this fair value gap being disrespected in premium, because from this range to this range, this is premium right here. This right here is our last support right here. I'm not gonna be saying this is our last. I'm gonna, because my model says this is our last support, not this. This right here is the last line of defense. Right here. As soon as we made an order block right there, question could ask, if we made this order block and if we made this in premium, why aren't we going back to discounts? The moment we close above here, above this range, what do? We went back into discounts. Yes? If we went back into discounts, what are we meant to go do? We're meant to go to terminus. That's all we're meant to do. So, another question might come. Why? But yet again, isn't this meant to also retrace lower? Even though, how will you know that this isn't meant to retrace lower? Because if you take 10 a.m., that right there is time and price. That right there is time and price, ladies and gentlemen. The opening of the 10 a.m. candle, we retrace higher, retrace lower. We made an auto block. Look at where the bodies and wicks are respecting. Look at the low. Look at where the low rests, and look at where the body rests. Right here. I entered right here. I longed on this, the opening of this candle. Put my stop loss below this wick right here. We have this volume imbalance, and because possibility this two could get taken, so we could just wick it and then go higher. And then stop loss a fixed 3R. Boom. And that was all I did. This was the best trade I ever took this year. This right here. Not the CL. I mean, not the indices. Nothing. This was the best trade I ever took this year. A 3R and is in the silver bullet time. Of course, you might say, but this isn't the silver bullet time. Well, the silver bullet time for my model goes with the macros. The macros are very, very important times for silver bullet too, because they also deliver price. You could enter in the macro time, and this is all you need. This time to this time, that is all I have been trading for the sale markets. I don't need anything here. I don't need anything here. If price expands, I look for another entry or I stay out. That is it. That is all there is to it. So this is basically it. 1 hour PDRA, SMT on that PDRA, Judah swing lower, and boom, 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 higher prices. That right there is the model, the fixed model. Drawn liquidity was where? Was this right here. But then we didn't get that. I only got out at 3 hours. I don't like chasing more, right? 3 hours is enough. Like, I don't think some of you guys understand, right? The CL market with the silver bullets is like, it's like cheating. Okay, let's say I got 100 contracts, right, and I'm risking like 1,800, right, and I take my 3 hours, bro. That is $5,000 made in basically an hour, 50 minutes, basically an hour. I would take this any other day because we have every single thing aligning. 1 hour PDRA respected, 5 minutes SMT. Then we had one. How many PDRAs? 1, 2, and then we have 3 PDRAs being disrespected. Auto block, and then for higher prices. Sell where? Below premium, below discount. This opening price right there is our discount. We sold below there. This order block right there, that's our discount. The CL market is run by order blocks. That is what is important, what I've been tracking for my backtesting. Order blocks are sincerely important for the CL market. Sincerely important for the CL market. So this is the model basically for the CL market and also for what? The NQ market. The CL market and the NQ, they have the same model. Like, I don't need to change anything unless I would like to take like a turtle soup entry around here, and then I will just like not wait for any confirmation and just enter on the order block. That's for like CL, because CL is just run from order block to order blocks. Alright. So Thursday, let's say we're trading on Wednesday, right? Wednesday we have one PDRE being disrespected. One. We have a tiny fair value gap. I'm not gonna be taking that fair value gap. But we had what? What do we have next? We're looking for 830. 830 came with news, right? We have one bidder rate being disrespected. We have two right here, and then we have three. The moment we get this close below, okay? The moment we get this close below, where's 10 a.m.? 10 a.m. is right here, right? Now a lot of people be like, oh, but this is the devil's mark. Like bro, if ICT didn't talk about in quotes the devil's mark, I don't know why people are calling it the devil's mark. Like, it irritates my soul that people call trading terms from the devil, like devils. If ICT didn't teach that, I will not. Yes, I am a dick rider. I am an ICT dick rider. I don't care if it's making, if I have a model, I wouldn't give a flying freak what people say. I will not use anything about devil's mark. We have one PDRA here. We have two PDRA auto block. We have three PDRA. They got disrespected. 4 PDRA, 5 PDRA. Oh my lord. What's next? You max leverage, right? Auto block right here. Where? We have an inverse. Remember, don't forget any inverse model that I made. I made an inverse model from back in the day, last month, or yeah, around last month. I made an inverse model and I back tested and realized that the inverse model works for me, right? This right here is a beautiful example of the inverse model. We have this right here. Guess what we had during this time? We had an SMT. Let me show you guys. Okay, we had we didn't have an SMT. Yeah, we did have an SMT. Yep, I knew we had an SMT because I put it into my journal. Around here, we had an SMT. Look at that. This I took out this high. This I didn't take out this high. That's our SMT right there. Then we traded lower. We continue traded lower. This I took out this high for the Brent, but we didn't. That right there means what? There is no need for retracement for the NQ market. We are super bearish. Ding dong. We're super bearish and we short. Inverse. Right here. Targeting fixed 3 Rs. Targeting fixed 3 Rs. Of course, you could say the low that created the high. Why am I using this low? Because this low has its fair value gap. The low that created this high, we close below. Hello? Hello? We close below. Hello? If we also use from the SMT high, because that is a daily range, to here. Hello? Hello? This right here is in discounts, right? Because of this, they are both aligning in discount, right? They got disrespected. Hello? We closed below here. Hello? We entered right down here. Hello? Let's say you're waiting. What do you see? From here to here. Order block. That right there is the last entry. If you were trying to see, oh, what happens right here? That right there is the last entry, ladies and gentlemen. That right there is the last entry, ladies and gentlemen. Ladies and gentlemen, that right there is the last entry. If you miss this, then I don't think there's, unless you get like a 1 minute. But look, this right here, that is the A plus. We're above midnight open. That right there is like, this is premium. We retrace higher into premium once again. Once again. To where? Go lower. Where is terminus? Right here. Why again will I be using this low instead of this low, because this low was the last low that we made to make this impulse. And look how we made displacements. Look at all of this. That right there is a dealing range. You could hold all the way to here. 6 hours. What time? 10:50. 10:50 is an important entry time. Very important from what I've backtested for the CL market. This right here is CL market delivering something that repeats from my backtesting. And I am astonished that this works way more than NQ. Right here, what do we have? We have a sweep of liquidity. Probably all of this will be a 1 hour order block right here. Let me actually take it right here. Or a 1 hour rejection block. Let's see. Yeah. Maybe not a 1 hour order block, because yeah, this 1 hour order block right here. Let's get a 50% of that. So around here, that's it. Also, this rejection block inside this order block inside this. Let's actually get here. It's so here will be like the 0.25 of the order block. If we go into the if we go into the 5 minutes, right? We have the swivel liquidity inside this order block, and then what do we have right here? We have 1. We have 2 right here. We have 3. What is this? We have 4. Boom. And what happened? We have from this right here to this high right here. We closed above, right? And we wicked it. We use this new dealing range. We trade below. What do we see? We see inside here there's an order block. What time is that? 10:10. That right there is a Judas, ladies and gentlemen. What do you see right here in premium? An order block. We close below the order block, but then what do we see right here in discount? An order block. Ladies and gentlemen, that is your silver bullet. I will be taking the CL trades a lot more seriously, because right now that I found my model, I am gonna start shutting down a lot of noise. Okay, I found something that repeats. All I need is draw on liquidity. I won't be looking for, like, I've been trying to look for a lot of things and trying to become more better, but I'm gonna block out a lot of shit, my boy, or anyone who watching. I'm gonna block out a lot of things that are real. Oh, what the hell? Okay, that was Brandon Kopersnitsky, a good trader. I'm gonna be blocking out a lot of things. All right. Gonna be blocking out a lot of things. Let's go to Twitter. Gonna be blocking out a lot of things. I just had to tweet today. Use Twitter for the first time. Oh, Matt Lover, nice. I just had to use Twitter for the first time. Oops. I had to use Twitter for the first time so I could give these guys to tell them what's wrong with my my replay mode, because it's been bugging 3 hours and they haven't responded. I have to add them. I don't know what they're doing. Waiting. And then we get this, nice, and then we post. Good. That's all I have right now. For the NQ markets, I'm not gonna lie to you, right? I will not lie to you. This entire week, Silver Bullet was every single day. I can't lie to you. I will not lie to you. Silver Bullet was. You see all of this? You see all of this? Every single day right here, the Silver Bullet was there. All of this. All of this. This, it was here. Monday, Tuesday, Wednesday, Thursday, Friday. Every single day, the Silver Bullet was there. I journaled every single thing because these times are the times that you need to learn about your model. You need to learn about order flow, structure, and every single thing. Look at this right here. Why am I using this? Because this made fair value gaps. That's why I'm using this. Like, we disrespected this right here. Bang. Disrespected. 1, 2, 3 P. They're disrespected. Like I said, super liquidity. Boom. As soon as we made this fair value gap, ICT said right here. Listen.
And then retraces back into that news driver here at 10. So what's happening here is, look closely with this swing low. It went below this low here, and then it rallied back up once more above the opening price at midnight. Does it take out this high? No. Why doesn't it take out this high? Because it has an imbalance here.
Listen.
Take out this high? No. Why doesn't it take out this high? Because it has an imbalance here.
If that high has an imbalance, and if we go to the charts, why doesn't this high get taken? Because it has an imbalance right here, right? We retrace from internal, from external to internal. This was this week right here. We generated buy side, equal highs right there, and this is our daily range because this is the last move because of this breakaway gaps. This right here is our internal low, ITL, internal intermediate term low, because we made a fair value gap. This is our sell side intermediate term low high. This is our buy side intermediate term low. We made a fair value gap right here. So this low, I was expecting us to get taken. Entry where? Right there. Stop loss where? Below here. Because if we disrespect this, we need to also disrespect this to go lower. And also we also need to disrespect this inverse to go lower. So stop loss will be below this and also below this. So that's 1, 2, and 3. 3 PDRAs to be disrespected for us to go lower. Boom. That right there is an A plus setup entry. But I missed this because I wanted price to close right here. I wanted price to close right here, or else I'll be bearish because I wanted us to go lower. But then we didn't get a close below. I waited for this candle. It didn't get the close below, so I closed my charts. That's all I did. I looked at this fair value gap as soon as it wicked, and then I waited, and as soon as it didn't, I just closed my charts because I know I'm gonna be doing something else. You target what? 2.5, and you're basically done for the day. And you take runners towards this highs and all of that, or you even hold it towards my institutional level I left around this right here. You hold it over there. I left my institutional level around here. Yeah. That right there was the A plus model or setup. Let me actually, this is it right here. 1, 2, 3. FVG was made equals makes the ICL more probability, so there was no need to take out the lows. Episode 17, 2022 mentorship starting from 1409. Daily range for ITL to a daily range. So look at this right here. As soon as we made this, right? And as soon as we made this is another range because of this ITL and also this fair value gap inside discounts. That right there, I don't know what like anyone could say, but that right there is, it's just too beautiful, man. It's absolutely beautiful. It's a work of art. Right here, what do? We sweep this liquidity, right? We close above, we came down, we traded higher, we traded down. Okay, we didn't close below. We wicked it, we swept liquidity, but guess what? We're inside discount. There is no need for price to go lower. Why? We went discount twice. We're trading higher. We're trading lower. Where is this? Why inside the range from here to here? Inside this range. Let's use 830. We're in discount. Let's use midnight open. We're in discount. Okay? The ranges help us identify where we are from the buy side and the sell side of the curve. Opening price tells us what or which premium or discounts are without using the dealing ranges. We have a daily range here. Discount was here. Discount was here. I will enter right here. 2 discounts. This one is only one because of the midnight opening, but this says 2 discounts. I will enter here, especially since we had an SMT around here. That I'm aware of. That right. We had an SMT, so that's just basically it. Like, that is the rundown of my model and what I will be using throughout. Okay, I just found, because like I was watching this 2022 mentorship, and then this, as soon as I heard about this, I replayed it again. I was like, hold on. I went back to my charts and I saw like, wait, the reason why it's like this is because of this fair value gaps right here. So that is how daily ranges are formed. If we have a large impulse move, like right here, from this high, this right here, that's a daily range, because a fair value gap was formed to right here. We didn't go there because we were already inside discounts. If we look for a fair value gap, there's no fair value gap formed. So we fair value gap was formed over here. It's low. We have a tiny fair value gap right here, and then we disrespect it. We have a fair value gap formed. What happened? It came lower. We even swept these lows. Right here we have a fair value gap formed. What do? Here. It's up here. And that's what you see. Right there. Ding dong. And that's basically all I have. That is the model I'll be using probably for the rest of my life, unless I want to add something else. I'll be using the midnight opening prices. I'll be using accumulation manipulation, because this setup right here was just a perfect example of accumulation manipulation and distribution. Like if you go into the 15 minutes, it was just a beautiful AMD setup, right? Look at that beauty. The problem I have right now is identifying order flow, right? I need to know when is a retracement happening so that I could enter on that retracement, and when drawn liquidity is drawn liquidity. Okay, I will be learning, because since I already have the model isn't order flow. A model is just what you see. Okay, I will need order flow context. I will need an order flow context to help me. Okay, so basically this is how I just solidified my model. Even like yesterday, like Thursday, we had, what do we have right here? We had an SMT from this side to this side. We had an SMT with ES. One disrespected, one PDR being disrespected. Two PDR being disrespected, this order block. 3 PDR being disrespected. 4 PDR being disrespected. And we have what? From this low to this high. From this low to this high. Sure, you could say that, but Paul, like, of course we didn't close below here. Would you still be bearish? Yes, I'll still be bearish. I'll still be bearish because this is the, what you call it? This is the 5 minutes. We had a huge SMT right here. Just understanding order flow, right? 1 PDRA, 2 PDRA, 3 PDRA, and then we have this PDRA right here. We had a retracement. If we take from this high that was made towards this low that was made, we have this fair leg up right here, and then we have what this inverse right here in premium. That right there towards this discount right here. Because this right here is a retracement, right? We're not chasing anything, we're chasing retracements. If you understand all of flow, if you know what comes after this sell side, what comes after this sell side, or what comes after you're targeting your drawn liquidity, then that I believe you could make an unfathomable amount of money. If you can tell, okay, I know price is gonna hit here, and since price is gonna hit here, I expect after it hits it for price to reverse. So if I know that this is a retracement and not a reversal, I will enter and then take all my profits right here, and then because I know that price is going up higher, that has been my plan for the past 4 months now. That's been my goal, to know what price is doing after my drawn liquidity, because I want to know from here to here. That's all I want to know. Not after my draw, what is next. On Friday, from this trade I took, this lows were my drawn liquidity right here. Now, what will be my target? Like after this lows were my targets, what happens next? I stood out because I was thinking price will reverse, but after this lows were taken out, look at what happened. We just basically massive sold right there. Order flow. Are we chasing a retracement or a reversal? Right? This right was a retracement. The silver bullet was a retracement. Right here, what was the silver bullets? Today the silver bullet was an expansion, was a continuation, basically. Alright? It's basically a continuation or a retracement. That is just it. So yeah, that is all I got right now, and I will journal this so that I could sleep better and not forget. So yeah. So to future Paul or future anyone that's watching this, probably is me most likely. So you, Paul, like, you need to pay attention to this model. Cut all the bull crap you see on Twitter, bro. You see all of this? I know you barely use Twitter. You only like use it to peek and then you get out. But cut every single thing. Cut everything, alright? So yeah, that's all I got.